If you're building a startup, I bet you've spent a lot of time thinking about that perfect pitch deck, right? But what if that's not what investors are really looking for? Today, we're going to break down the actual foundation that gets a company funded, moving way beyond the slide deck to what truly matters. Okay, let's just start with this, because it flips so much of the common advice on its head. It is not about the perfect, polished pitch. It's about building something real. Look, investors see hundreds of slick presentations. What makes them actually stop and pay attention is a solid foundation, a startup that's been built with real substance, not just for show. That underlying strength, that's what separates the companies that get checks from the ones that don't. So how do you actually build that kind of foundation? Well, it really boils down to these 5 pillars. Think of this as our roadmap for the next few minutes. We're going to cover everything from your core idea all the way to your team. First up, Pillar 1, start with a real problem. Now, this sounds so basic, but it's where a ton of founders stumble. Investors don't fund cool ideas, they fund urgency. This right here is the absolute bedrock of your entire company. You know, it's so easy for founders to lead with, oh, this is a $1 trillion market. But that's not the hook. The real hook is urgency. The key isn't how big the problem could be one day, but how painful it is for people right now. When you can show that something is fundamentally broken today, that's when you have their undivided attention. So this is the question you have to be able to answer cold. What is costing actual people time, money, and energy right this second? If you can articulate that sharp, specific pain point, and if it sounds like you have lived and breathed this problem yourself, you're not just pitching an idea anymore. You're telling a real story that makes the need for your solution feel completely obvious. Okay, so once you've got that urgent problem locked down, we move to Pillar 2, show, don't just tell. Because look, having a great problem isn't enough. Investors need to see that you're actually the one to solve it. And in these early days, it's not about having some perfect 10-year plan. It is all about motion. I absolutely love this distinction right here. Investors have met thousands of talkers. They've seen the perfect plans. They are desperately searching for builders. A builder shows progress, even when it's messy. They ship something, they learn from it, they adjust, and they just keep moving. That pattern of execution is worth so much more than a beautiful vision on paper. And let's be super clear here. Early traction does not just mean revenue. It can be any of these signals: a working prototype, a pilot program that went well, a bunch of deep conversations with potential users. It's all just proof that you're learning fast and you're getting things done. An investor just wants to see that the wheels are turning, because that tells them you're not going to quit when things inevitably get hard. All right, on to Pillar 3, protect your edge. This is so critical, especially if you're building a technical startup. A good idea is going to attract competitors, period. So the real question investor has is, what's your moat? What's going to stop someone else from doing the exact same thing? Your idea gets you started, but your defensible edge is what lets you win. And this brings us to this really powerful concept called seedstrapping. Now, this isn't about avoiding investment just for the sake of it. As you can see, it's a strategic choice. You are intentionally investing your own time and energy to build leverage, things like securing your IP or building a killer prototype, before you even think about asking for funding. You're basically building your moat before you go ask for money to build the castle. And this just lays out the process perfectly. First, you build that leverage. Then, you raise from a position of real strength, not desperation. And what does that do? It lets you keep control, avoid giving up too much of your company too early, and grow on your own terms. You're raising by choice, not by necessity. Big difference. Next up, Pillar 4. And this is a skill that's deeply tied to everything else, but is so often overlooked. The ability to think and speak clearly. It's not just about what you've built. It's about how well you can explain it. Your ability to make complex ideals feel simple is one of the strongest signals you can possibly send to an investor. Let this one sink in. A confused investor is a silent one. If they can't grasp what you're doing in the first few minutes, the conversation is pretty much over. And it's not because your idea is bad. It's because confusion is an absolute deal killer. Simplicity isn't about dumbing things down. It's proof that you understand your own work on a deeply fundamental level. And this right here shows you exactly why that clarity is a superpower. See, the investor you're pitching isn't usually the final decision maker. They have to go back and pitch you to their partners. If your story is simple, clean, and memorable, they can retell it with confidence. You've basically given them the tools to be your champion inside their own firm. And that is how deals actually get done. And that brings us to our final pillar, number 5, which, let's be honest, might just be the most important of all. Be the irreplaceable team. Because at the end of the day, after all the talk about markets and moats and tech, investors are betting on people. The ultimate question they're trying to answer is, why are you the ones to pull this off? This isn't about having a perfect resume from some fancy school. It's about something they call founder market fit, that undeniable feeling that you were almost destined to solve this specific problem. Beyond that, it's about grit, it's about being coachable, and, this is a big one, the trust between the co-founders. Believe me, investors are experts at sniffing out co-founder drama, and they know it's a top reason startups fail. Here's the bottom line. Building a startup is brutally hard. Things are going to break. Plans are going to fail. And investors are betting that when that happens, you'll be the team that keeps pushing forward. They're betting on your resilience, not on your perfectly polished presentation. So what happens when you put all 5 of these pillars together? It creates this fundamental shift in your entire posture. You're no longer just a person with an idea asking for help. You become a leader on a mission. You're on a train that is already moving forward, and you're inviting them to jump on. And that right there brings us to the ultimate takeaway. That mindset, that feeling of undeniable momentum, that is the most powerful signal you can ever send. It tells an investor they are joining something that is already happening, not waiting for you to get started. So, as we wrap this up, I'll just leave you with this final question to think about. Because at the end of the day, smart investors don't invest in optics. They invest in structure. They invest in a real solid foundation. And that's what's built to last.